Hi friends, in this video I want to speak about 3 stocks that are showing very good signs of profit growth, therefore might build some momentum in the coming weeks. Throughout this video I will present you data backed analysis so that you're very clear in terms of what these stocks risks are and what are the potential opportunities in these stocks are. Stock number 1 is Canara Bank. Have a look at my screen and you will see the valuation of Canara Bank right now as compared to other PSU banks, and clearly right now from a PE perspective it is looking undervalued 6.80, and from a PB perspective it is stacking very nicely when it compares to its peers. Natural question will be, Rahul, that just because a stock's valuation is looking good from a PB perspective, it doesn't mean that we should go and buy that stock. Absolutely the right question to ask. Therefore, let me now give you more details. If you look at the chart history of Canara Bank in the last 1 year, I want you to have a look at from almost February 2024, the stock has been range bound from 110 to almost maximum it has gone to 125. So it is going between 110 to 125, and what you will notice is that there is a very strong support at around 109, 108 level while it is trying to break the 125 level. Now can it break this 125 level and can it go to 150, 160, 70 is the question. So in my view there are few triggers due to which this stock may break this 125 level and can very well go to 150, 160 levels. So trigger number 1 is MSCI index inclusion. I created a deep post on MSCI index and what is the opportunity. If you understand MSCI index, please go ahead and read MSCI index. You will learn a lot about it. But if you are not yet YouTube member, please consider subscribing to my YouTube member community, because I post these in-depth analysis about indexes, mutual funds and stocks, and you will learn a lot there. But the point is that Canara Bank is among one of the stocks that has been included in the MSCI index that gets rebalanced every quarter. So on 14th of May, MSCI announced that Canara Bank is being included in the MSCI index. When the stock gets included in MSCI index, what happens is that the big investors who are following or tracking that particular index, they are likely to buy that to rebalance their own portfolio. So it is going to see millions of dollars of fund inflow into Canara Bank, and therefore that is one trigger that will cause more demand in the market in my view, and therefore the Canara Bank stock prices might go up in the short term. Trigger number 2 is the recent stock split of 1:5, and more importantly the dividend that the company announced. So if you look at my screen, after the stock split, the company's dividend is going to be around 3.22 per share, and if I divide this by the current market price of 114, it comes to around 2.82% of dividend yield just on this particular dividend. I have not even calculated the entire year's dividend, and the record date of this dividend is going to be sometimes in June, subject to the board approval. So what is likely to happen is that mutual fund investors, portfolio investors might invest in this stock because they want to get this dividend coming up in the month of June, because this is a straight 2.82% of dividend that they are going to get. So that's a trigger point number 2. Trigger number 3 is the fundamentals of this stock. Have a look at my screen and you will note that the net profit of Canara Bank has grown up by 37% in FY24. More importantly, if you see total interest income, that has also grown by 28%. Net interest income, which is how much of interest income the bank earned minus the interest expenses that the company had to give it to borrowers, is only grown by 16%. Now, had this number of 16% was, let's say 25%, 26%, then the profitability would have been very high. What is dragging this number down is cost to income. Have a look at my screen and you will see that in March 2023, cumulatively the cost to income, which is how much of the money company is spending to earn 1 rupee, is 44 paise, and it has now gone up to 47 paise. Why this cost has gone up? Because mainly RBI repo rate has been very high in the last 4 to 6 quarters. And in the next few quarters, when RBI repo rate comes down, what is likely to happen is that the cost of borrowing for banks is going to come down. And when that happens, net interest income that the bank is going to earn is likely to grow at a far better speed than the 16% we have seen. So in my view, that net profit might grow more than 37% rate if the RBI repo rate comes down. So to me, the trigger number 3 is the profitability boost that might happen due to the RBI repo rates. Now the natural question you may have is that, Rahul, if net profitability of this bank has grown by 37%, is it that they are giving more loans to people and are inviting bad debts into their balance sheet? For that, have a look at this data and you will see that gross NPAs of Canara Bank has come down drastically in last 1 year. It used to be 5.35, it has come down to 4.23, which is a massive reduction. Also, net NPA has come down. Now, when the gross NPA comes down, what typically happens is that the company does not need to make a lot of provisions. Have a look at my screen and you will see the total provisions for FY24 has come down by 13%. Now, this is an important point because when your provisions are coming down, then essentially your profitability is going up. And it is a cycle that Canara Bank is trying to build here, that the gross NPS come down, make less provisions, make bank more profitable, and this is how profitability plays an important role into any bank's growth. Couple of other points from fundamental perspective that I want to make is, have a look at my screen and you will see their current deposits have grown by close to 34%. Now current deposits is the cheapest way of raising funds for any bank, and if that is growing by 34%, then in my view that is a very good way of becoming profitable or increasing your profits in the coming quarters. And when I was reading this commentary from their management, what their management was saying is that it has not happened incidentally. They have been launching new products, new platform, new services, new features, and they have been trying to reach out to more and more customers to get more and more current accounts as well as savings accounts. So their CASA ratio is improving every year, which is a great sign. Last point, in terms of the shareholding patterns, if you see, Government of India holds 62% stake in Canara Bank, and in my view that leaves very little float in the market from a liquidity perspective. Maybe one of the reasons that's why Canara Bank went for a stock split, and in my view that's a very good sign for investors, because promoters are sitting at 62% stake when it comes to liquidity. Does this mean that you should go and buy this stock? Absolutely not. Please do not take this as a recommendation. There are a couple of risks that you need to be aware about this Canara Bank stock. Risk number one is elections that are around the corner, and PSU banks might get a bad hit because of uncertainty in the politics. Risk number two is the RBI policies. Now RBI policies, anytime RBI can come up and announce a policy restriction in terms of liquidity, in terms of provisions, and that may have impact on banks such as Canara Bank. So please be very careful and consider these two key risks before any time you invest in Canara Bank stock, and do not take this as a recommendation. Do some more analysis on Canara Bank and decide according to your portfolio whether you want to invest in Canara Bank or not. But if you like this analysis, hit the like button. Let me know in the comments a simple thank you. It will motivate me to bring lot of content for you at zero cost. With that, let's move to stock number 2. Stock number 2 is Motherson Sumi Wiring Limited. Just to give you a little background of this stock, the stock was demerged from its parent company Motherson Sumi Systems back in April 2022, and at that time it got listed at 66 rupees per share. Also in September 2022, the company gave a bonus issue of 2:5, which was excellent news for the investors at that time. However, if you look at the stock price history, we will notice that the stock was under pressure from September 2022. At the time the bonus issue was given. From that time up until April 2023, the stock fell down to 46 rupees. But since then, the stock has been making upward trend and is now trading at around 69 rupees level. Now, the reason I like this stock right now is because of its profitability and revenue and EBITDA growth. Have a look at my screen and you will see in FY 2024, the PAT has grown by 31%, which is an excellent growth rate. And also from a revenue and EBITDA perspective, this Q4 has been the best ever quarterly and in fact yearly performance from revenue and EBITDA perspective. So that is looking very promising. ROCE of this company is looking very healthy at 48%. Also, if I talk about the debt, the company is net debt free, which is excellent from a balance sheet perspective. So what does this company do? So this company supplies wiring harnesses to auto OEMs such as Tata Motors, Maruti, etc. Have a look at my screen and you will see that the company holds market share of over 40% in the wiring sector. In FY 2023, company launched around 23 new products and 2 new plants are also coming up. In Q1, the company has spent almost 198 crores of capex in FY 2023. So company is setting itself for the upcoming growth, maybe from the EV sector. We'll talk about that in a minute, but let me also speak about one of the key trend that I see is going to play out is the SUV trend. I've been speaking about Mahindra and Mahindra and the share has gone up like crazy, and that is mainly because of the SUV growth in Indian market, and this company is going to get benefited from SUV track as well. For example, Tata's EV such as Punch or Tata Curve. Motherson Wiring is the sole supplier of these EV cars, and as the EV demands grow up in the next 2 to 3 years, in my view, this stock is likely to do much better because of the growing demand of the cables and wires coming from the EV industry. If you look at the shareholding pattern, you will see that the promoters hold solid 61% stake in the company, and FII's DI's positions has been more or less constant, not too much of movement. So there is not very much float available in the market from liquidity perspective, and therefore it is very good from investors perspective. If I compare the PE and PB ratio of this company, you will notice that it is trading at a higher PE than the industry PE, but if you look at other auto ancillaries, you will find that 47 is comfortable, but from a book value perspective, it is very high, 18. But if you look at the median PE of this company in the last 3 years, it is at 53. Right now it is trading at around 48. So from its own comparison perspective, it is trading at a below median PE. If I look at the PB ratio of this company from a median perspective, it has gone to crazy PBs in the past, such as 25 and 24. It has now come down to 18, albeit it is still very high from industry perspective. Now if I look at the last 1 year, look at the price history, it's been extremely volatile stock. It has gone up to like 70 level, 73 level, come down to almost 60 level as well. So please be very careful whenever you want to take any position. If at all you want to take any positions in this company, you need to buy this at the right price. Don't please go ahead and buy that at a very high price right now, which is at 69. In my view, you have to consolidate this stock at a low price when there is a dip, because dip is likely to happen for various reasons. Also do full analysis of this stock, because I've not done full analysis of this stock here. I've only spoken about few critical factors about this stock, and do not take this as a recommendation. Do full analysis and take your own positions according to what you think is right for you. Is there any risk in this stock? There is one key risk in this stock. What we have seen in Tata Motors, for example, they have been saying that in FY25 the passenger vehicle segment is going to slow down. So that might have an impact onto the demand of wiring harnesses coming from auto OEMs. I cannot tell you whether this demand is likely to play out or not, but the data suggests the company has been showing very good profit growth rate. So therefore I've included this stock in this video. Third stock is Men Infra Construction Limited, a Mumbai based real estate company. Have a look at my screen and you will see in the last 1 year the stock has given very good rally, and it has gone up to close to 237 levels, and it has now come down to around 196 levels. Now if you look at the P&L of this stock, what you will notice is that in the last 3 to 4 years the revenues of this company has been doubling from 266 crore to 427, almost doubled, 961, then 1890. However, in fiscal year 2024 the revenues have come down to 1263 crores. But what you will also notice is the net profits. So the net profits, although the revenues have come down, the net profits have grown up. It has gone from 289 crore to 303 crores. This is mainly because the PAT margins have improved. The company has become very leaner. Have a look at my screen and you will see that their PAT margins have been constantly improving. From FY21, it used to be at 7.1%, gone up to 18%, then a slight dip to 13%, and now in FY 2024, the PAT margin percentage has gone up to 22%. And that is precisely why I like this company, because their PAT margin have been consistently going up in the last 3 to 4 years. Few other factors that I like about this company is, number one, before time completion. It has a very good track of completing the real estate projects well before time, and I covered this stock in one of my videos long back. I can't remember when, but I talked about 16 projects that they have delivered before the due date, which is excellent, because of which they hold negligible inventory. 90% of their inventory is sold before the occupancy certificate is received. So from that perspective also I like this particular construction stock. Now comes third critical point from a balance sheet perspective. This company is debt-free company. There are very few companies in construction sector which has zero debt, almost zero debt, which is excellent from balance sheet perspective. Now comes very important point. In FY25, company is projecting to launch 11.5 lakh square feet of carpet area. Now just to put this in context, if you look at the trend of the last few years, this is going to be the highest ever square feet launch area if they are able to hit 11.5, and in my view that is going to give boost to the revenues as well as to profits. Also from revenue visibility perspective, the company is reporting that the revenue visibility is over 15,000 crores in the next 5 to 6 years. If they are able to hit this growth, then I think the company share prices are also likely to follow in the next 5 to 6 years. Also interesting pattern you will see in the shareholding pattern here is that the promoters have been buying the stock. It has gone up from slightly from 66% to almost 67%. FIIs and DIs have very low stake in the company, but overall from a float perspective, there is limited float out there. That also is very good sign from investing perspective. If I look at the valuation of this company from a PE perspective, it is trading at 24, lower than the industry PE of 37. And from a PB perspective, it is at 5.01 versus 3.21. Now, could this stock go from 196 to 250 level, 260 level? I don't know. Nobody can guarantee it, but there are good signs out there that the stock is going to do well in the future. Please do your research on this stock. Again, I have not done the full analysis. I have only given you pointers to consider in your research. One of the biggest risks right now with this stock is the small cap correction that might happen overall at index level. And when that happens, this stock is likely to get hit as well, because this is a small cap stock. So please consider that risk in your assessment as well. I hope you found a lot of information in this video. If you did, hit the like button. Let me know in the comments a simple thank you. Also, let me know which stocks you would like me to cover in my upcoming videos. I will look at the comments and accordingly I'll select the stocks for upcoming videos. With that, I'll see you in my next video. Until then, keep rocking.